Welcome back to Compound Thesis. Our guest today is Jay Jog, and he's the co-founder at Sei Labs. It's a general purpose layer one blockchain specialized for trading. Now, Sei just recently closed a $30 million round at an $800 million valuation. And prior to Sei, Jay was working on building crypto and margin loans at Robinhood. So a lot of experience in the fintech trading space. On the show today, we're going to go into the trilemma that trading applications face on existing blockchain infrastructure, and how Sei is trying to, bring a new approach in their native L1. Welcome to the show, Jay.
Awesome. Thank you for having me on, sir.
Yeah, so before we dive into the trilemma, for those unfamiliar with Sei, can you just tell us a little bit about the org and what the origin story is?
Of course. So my name is Jay. I'm a co-founder for Sei Labs. My background is that I grew up in the San Francisco Bay Area. So I was surrounded by technology basically my entire life. Silicon Valley is just very, very tech focused. I got into basically programming pretty early on. And when I was in high school, I actually used to do speech and debate. And at a practice debate is when I met my co-founder, Jeff, who also was doing speech and debate at that time. So we went to competing high schools, met each other through speech and debate. Afterwards, I went off to UCLA to study computer science. And I ended up getting into crypto back in 2017. So at that time, my roommate was starting a crypto company. He was going through Mainnet Launchpad. So we ended up working together on a couple of different projects. And afterwards, I ended up joining Robinhood, the Robinhood. And yeah, I spent almost 4 years over there. I saw the company 10x, and I was an engineering lead when the GameStop saga happened 2 years ago. I'm guessing most listeners are probably familiar with that. But just to kind of go over what happened there was basically this national movement happening where there are some stocks like GameStop and AMC that were just starting to, just go up in price a lot. They're mooning super hard. There are hedge funds that were shorting these stocks. And because the price of these stocks was rising, these hedge funds were getting short squeezed. So there's this entire narrative around how retail is winning and how hedge funds are getting wrecked. And just out of the blue one day, Robinhood turned off buys on GameStop, AMC, and several other stocks. And I mean, just to put the context here, right? Like Robinhood was the primary place where most of these retail users were actually buying these stocks. So Robinhood turning it off was just extremely bad for this entire kind of narrative around how retail was finally winning against hedge funds. And the biggest problem with this is that Robinhood had zero communication, zero transparency around what they were doing internally, right? They did not tell the community anything. They also didn't tell us, the team, anything at all. So as an insider, I had no clue what was happening. And on that day, a bunch of my friends reached out to me. Some of them were actively holding GameStop positions, so they were pretty pissed off. I even had like colleagues that I hadn't chatted with in several years that reached out to me as well, asking essentially, what the hell is going on? And yeah, I mean, it sucked because I had absolutely nothing to be telling them, right? People from my team also asked me questions. I was an engineering lead. I had nothing to be telling them at the time. And I guess just going through that experience as an outsider, it feels pretty bad because, I mean, first of all, you put your reputation on the line to join a place like Robinhood. And then when an event like GameStop happens, it just follows you around for the rest of your career, right? I think in Robinhood's case, there was no fraud, but if it was like FTX or any of the other companies that had pretty big implosions in the past year, like just being an insider over there is just going to be carrying you or following you around forever. So, I mean, kind of after going through that experience myself, I became much more of a decentralization maxi because anything that happens on chain is inherently trustless. And that is a massive difference versus having to rely on something like Robinhood, which is extremely trusted, right? So as Robinhood was happening, as the GameStop saga was happening, my co-founder, Jeff, he actually reached out to me just to check up on me. He's like, yo, man, how are things going? And a few weeks later, we basically just started talking about everything that happened, how things could have been done in a different way. And the idea that we came up with at the time is, okay, what if we tried just building something in a decentralized way, something like Robinhood in a decentralized way, right? And that was the original thing that we wanted to build, which was a decentralized exchange. So we set out to build a decentralized exchange. This got us looking into every layer one, every layer two, and all of the other infrastructure we could use to build an exchange. And we ultimately realized that the infrastructure is lacking which is what led to us starting Sei. So for listeners, Sei is a general purpose layer one that is optimized for trading. And internally at Sei Labs, we have just one core thesis, which is that the exchange of digital assets is the most fundamental use case for blockchains. Every single successful application in crypto right now is either directly or indirectly a trading application. So like if you look at Uniswap, that's very clearly a trading application. You can trade spot assets there. If you look at OpenSea, it's an NFT marketplace, which is essentially just an exchange where you can go and trade NFTs. So it's also a trading application. StepIn is also a trading application, interestingly, because yes, it is a game, but it has an in-game marketplace, and that is one of the most, most important parts of the entire product, where you can go and trade in-game assets. So it is also directly a trading application. Even MetaMask, most of its demand comes from people that install the wallet to go and start trading on chain. So the core source of its demand ends up being trading. So it's indirectly a trading application, even putting aside the fact that it has the swap functionality built into it. So trading is the most fundamental use case for crypto. The question then becomes, like, how do you help that grow? How do you help it get bigger? And it's becoming abundantly clear right now that there's significant tailwinds that are actually pushing more and more people to start trading on chain right now. There's been significant regulation that is starting to get passed, or that's being discussed as a result of FTX and all of the other centralized blowups that happened. And this is essentially going to result in more regulation on centralized entities, and people that want to trade will then gradually start moving to trade on chain. There's also a growing shift towards more people and more kind of use cases for tokenization, which is leading to more demand for 24/7 trading of these tokenized assets, which is just leading to more organic increase in the amounts of on-chain trading. So it's becoming clear that exchanges are important. Demand for exchanges is growing right now. The question then just becomes, how do you help them grow? And that's what we spend all of our time at Sei thinking about. How do we solve the exchange scaling problem? And the core promise that we make to teams is that you can focus on user acquisition, and we will focus on building the best infrastructure for you. And that's resonated with a lot of folks at this point. There's over 150 projects building on Sei right now ahead of the mainnet launch.
It's exciting. Yeah. I mean, it's funny, going from the frenemies to co-founders. And I kind of looking at Jeff's background, he definitely brings a lot of the TradFi, experience. I think it was at Goldman and Cotu before joining Sei. So tremendous amount of experience on that front. And then you on the engineering side. So, a good combination there. And I actually just saw a chart this morning, and it was showing the share of volume DEXs versus centralized exchanges. And there's been a lot of talk about obviously the collapse of FTX and just kind of liquidity drying up on a lot of the centralized exchanges. But yet you've got Uniswap and others that continue to operate at a tremendous clip that are seeing more market share goes towards those. But your fundamental thesis kind of relates back to what you call the trilemma for trading, right? And so would love for you to unpack what that looks like, as there are a number of applications that are built on general purpose L1s, obviously the the Ethereums and Solanas of the world. But what are you doing specifically at Sei to optimize for trading specifically, so that your apps and your ecosystem can build off of Sei?
Yeah, that's a great question. So when we first got started building an exchange, right, we started looking into all the infrastructure we could use to build an exchange. And we came across what we started internally calling the exchange trilemma. So basically between decentralization, capital efficiency, and scalability, every exchange out there right now is only able to get two of the three. For example, if you look at Binance, they are a centralized exchange, so they do not get decentralization, but they do get capital efficiency and scalability. If you look at Uniswap v2, they get decentralization and scalability, but not capital efficiency. And this lack of capital efficiency is what led to the designs for Uniswap v3. And if you look at Uni v3, it gets decentralization and capital efficiency, but I'd make the argument that it's not scalable. So we don't think the solution here to solve the exchange trilemma is to keep iterating on exchange mechanisms. We don't think the solution is to go from Uniswap v2 to v3 to v4. We think the solution is to do a rewrite of the underlying infrastructure. And this is exactly how innovation typically works. If you're familiar with the idea of application infrastructure cycles, it basically is the idea that you first have some infrastructure that gets created. This leads to new types of applications that are enabled. Some of these applications find product market fit, many do not. The ones that do find product market fit need new infrastructure to help them scale better. And oftentimes this new infrastructure is extremely specialized for those types of applications. One example here would be with the database industry. So you started off with, let's say, Oracle. Oracle led to all of the Web 1 and Web 2 applications that we use today. Most applications were created just build, but some of these have found very strong product market fit at this point. And now we're starting to see more specialized infrastructure, like Databricks Warehouse getting created specifically for AI. We think the exact same thing will be happening with blockchains. We started off with Ethereum. This led to several decentralized applications, the explosion of decentralized applications that we use today. Many of them have no semblance of product market fit, especially once you take away the token-based incentives. But exchanges have found genuine product market fit. So now the question is, how do you actually help these exchanges solve this exchange trilemma? And that's why there will be specialized infrastructure getting created to help these exchanges. So that's exactly what we're building it today. We're optimizing every single part of the stack to help give exchanges the best possible experience. So when we originally got started, we were looking at other layer ones on the market and trying to think of like, okay, what is like, why can't we build over here? Like, what is wrong over here? And I mean, we looked at Solana, looked at Aptos, looked at Sui, looked at Avalanche, Near, and all of the other big general purpose layer ones that we know and love today. And there were a few different buckets of problems that became very clear for exchanges. The first is around time to finality. Most of these chains just did not have a time to finality that was fast enough. The second is around throughput. You need greater throughput for exchanges than what these layer ones were offering. And third is in terms of user experience. None of these layer ones were really specialized to offer a better user experience for exchanges. So that's exactly what we set out to build. And in terms of what we offer now, Sei makes use of twin turbo consensus. So this helps Sei offer the fastest time to finality of any blockchain out there. We're seeing a lower bound of around 450 millisecond time to finality in the public testnet, and that's with mainnet configurations. So the reason time to finality is important for exchanges is, let's say that you're a market maker and you want to open a position on chain and then you want to hedge it on Binance, right? Well, if you have a longer time to finality, then you're taking on more risk because there's basically only two ways that you can hedge your position. You can either hedge your position as soon as a block is created, but before it's considered finalized. And in that case, the block could be reorged. Mm-hmm. On chains like Solana, for example, 5% of blocks are reorged. So if that block gets reorged, then you might just be left holding that hedged short position on Binance. And there's no guarantee that your position on chain will get filled, and there's no guarantee it'll get filled at the same price. So that introduces you to additional risk, which results in you offering wider spreads, which leads to a worse user experience. The other thing you could do is to just wait until a block is finalized. But if it takes like 3 to 10 seconds for a block to get finalized, that's 3 to 10 seconds of price volatility that you're exposing yourself to. And the end result of that is that you have to take on more risk and offer wider spreads to your users, which leads to a worse user experience. That's why time to finality is important. And Sei's time to finality is the fastest out there. The second thing that we offer is greater throughput. So Sei supports 20,000 orders per second in the public testnet, which is a magnitude greater than most other ecosystems, which only get between 1 to 3,000 orders that can be processed every second. And the last thing that Sei has is a native matching engine that is built into the chain. So this is a primitive, and anyone that wants to build an order book-based exchange can make use of this underlying primitive to help get their exchange off the ground. And under the hood, this is making use of frequent batch auctions to help with filling trades. So the way that this works is rather than having all of the orders in a block get sequentially executed, every order will get executed at the exact same price. So every order will get the exact same treatment. What this means is, first of all, there's price fairness within a block. And secondly, and more importantly, this prevents negative activities like front running from happening. So these are a lot of the optimizations that we made. But I mean, super high level, every single part of the chain is specialized to give trading applications the best possible experience.
So you highlighted kind of like maybe 3 different applications, whether it's like a DEX, an NFT marketplace, or GameFi. Across those 3 different verticals, where do you see the most benefit to deploying on a Sei versus another general purpose? Is it kind of equally advantageous for each one of those different cohorts, or do you feel like there's product market fit better for one over another?
Yeah, so I would say that it ends up being beneficial for all 3 types of applications to launch on Sei. So Sei is optimized for trading apps, right? And essentially every single application in crypto right now is a trading app. Trading is the most general purpose use case for crypto. And that's why we decided to architect Sei the way that we did. In terms of the benefits that all these different types of applications get, the consensus level benefits, the parallelization that we've enabled to offer, the better throughput as well. These are applicable for every single type of product that is built on Sei. And at this point, we're starting to see a huge number of diverse types of applications getting built on top. One misconception that people have is that Sei is a DeFi chain. Sei is not a DeFi chain. Trading is much more general purpose than that. And as a result, there's NFTs on Sei, there's games on Sei, there's rollups getting built on Sei. Some of the more interesting things to mention would be we have an esports league called Fable that is being built on Sei, where different teams can compete against each other. And the improved consensus and the improved throughput enables a better user experience over there. Another project would be Tatami, which is a game publisher. And building on top of Sei allows them to offer a better user experience for their games and their end users as well. And one of the other projects to mention would be Senate DAO, which is building political tokens. And building anything that is directly related to trading like that just gives you a much better experience on Sei than you would on any other ecosystem. So I would say that from Sei's side, the core value proposition that we offer to teams is that building a trading application on Sei is going to give a better user experience than building that trading application in any other ecosystem. And I mean, 5 years from now, I would say that our vision is for the kind of decentralized exchange experience, the decentralized trading experience, to be identical to that of the centralized trading experience. Because right now there's like a massive disconnect, right? Like trying to do anything on chain is incredibly clunky. It's slow, it's difficult to onboard. The vision that we have is one where building a DEX and building any kind of decentralized application on Sei will be identical to building that same application in kind of a Web 2 format.
So I guess if you break it down then on like the end user side, right? So if you got institutional versus retail that are participating in any of these different applications, like what is the impact to them, right? If they're using the same application on 1L1 versus that same application that would be built on Sei, like can you help kind of just walk through an example maybe of what the experience would look like? You mentioned like higher spreads or lower, throughput or time to finality, but yeah, just kind of like break it down, I guess, to make it more tangible, right? From a user experience, how would I get better price improvement and or efficiency by leveraging something that's optimized for trading versus doing it on one of the legacy chains?
Yeah, absolutely. So I mentioned before that there's 3 main technical improvements that we made. First was twin turbo consensus. And the biggest benefit there is the improved time to finality. So from a user standpoint, everything will just be much snappier because there's a much faster response time. One of the biggest clunkiest parts of using Ethereum or Bitcoin is just how slow things are. In Sei's case, it matches Web 2 level speeds. With 450 millisecond time to finality, it's incredibly fast. And that leads to a much smoother user experience. And I mean, they've done multiple studies showing that if you pass certain thresholds, then people stop engaging, right? Like if you're on a Web 2 application, if it takes like a second or a second and a half, then people just get distracted. They go to a different tab. They stop engaging as much. So you do need faster time to finality for better user experiences overall. That's one of the things that Sei offers. And there's a lot of ideas that Sei has for how to further improve this even more, to make it even faster than it currently is. The second thing in terms of throughput, it just will result in lower gas fees if you're going to be a market maker that is providing liquidity on chain. Sei also offers this concept of order bundling for any kind of more active user that wants to submit multiple trades in any block. They can just combine all of their orders together and submit one transaction, and then the chain will be able to process those transactions or those orders and route them to the correct markets. You don't need to write like a specialized smart contract or anything. You can just natively do that, and that's supported by the chain. That helps improve the user experience as well.
It's like embedded algo trading almost, that like some of the more sophisticated desks have, that maybe a retail investor takes advantage of through like their Fidelity or Schwab account, but that seems like it's already embedded directly on the Sei chain.
Yeah, exactly. And I think the last and biggest thing around the native matching engine, it just prevents front running, right? So for listeners, front running is a practice that is illegal in traditional financial markets, at least in the United States. And it's the idea that someone sees a retail order coming in, or basically a sophisticated party sees someone else's order coming in. And then they decide that, okay, rather than filling this order immediately, we will bump up the price of that asset and then sell that asset at a higher price to that user, like bring down the price of the asset and then buy it from the user at a lower price. In most ecosystems, this is more or less impossible to prevent. But in Sei's case, because Sei offers the native matching engine, every single order gets filled at the same price. So this predatory MEV just cannot exist on Sei within the scope of a block. So those would be a lot of the improvements that would affect the end user experience on Sei.
Does that potentially make it less attractive to arbitrageurs that are participating on Sei versus other chains, or are they getting there's a cost benefit on that trade-off, right? For some folks that see that as a opportunity versus a cost. So how are you kind of seeing that play out?
Yeah. So the single most important thing that sophisticated traders care about is having order flow from retail users. So any ecosystem that makes optimizations to draw in more retail users will end up making sophisticated traders happy. To your specific question, yes, this makes it more difficult to arb on Sei, and that's a very conscious design decision that we made, because we think that optimizing for the retail user experience is the single most important thing that matters. Everything else just falls into place if you have organic activity happening on any ecosystem, right? If there's a lot of retail users, then there'll be sophisticated market makers, sophisticated players coming on because they want to help out, provide liquidity for the rest of these retail users. So yes, the trade-offs we made are entirely to benefit the end user. And yeah, it will lead to, in the long run, it will lead to more engagement from sophisticated players through an indirect fashion.
It's like building a food chain, right? Where you've got like the small minnows or the plankton that are participating into the minnows, into the sharks and then whales. And so one way to look at it, that you're building an entire ecosystem that benefits all different layers of that chain, versus just optimizing for larger traders or transactions that take advantage of those that are less sophisticated or have less capital to participate. Yeah. Okay, so you guys also have a large ecosystem fund that you're working to deploy into different projects that are building on Sei. Can you give us just a little bit of, you mentioned some of the projects already, but are there any of the big blue chip DeFi protocols or labs teams that are looking at building on Sei, and what are you kind of seeing as part of the demand side for the ecosystem?
Yeah, so for anyone that's trying to get more involved with Sei, there's a lot of different ways that Sei can help out, just founders and anyone that is maybe more involved to get in, or more interested in getting involved from a community side. So if you're a founder, Sei offers an EIR program, an entrepreneur in residence program. So if you're someone who has tried building a startup before, or maybe doesn't have an idea but think you would be a good founder, Sei can help you out get started, provide a lot of resources to make it possible for you to get off the ground, from basically every single aspect, right? From the financial aspect to also the go-to-market side of things. And when we originally got started building Sei, it was very clear that there's a lot of projects that are interested in building on Sei. But one of the things that makes it more difficult for them is the lack of clear capital that would be invested in them or used to provide liquidity if they start building. And it was just kind of a difficult bet for them to make. This was around a year ago. And as a result, a lot of the investors in Sei and a lot of market makers, a lot of market participants pulled together their capital, which at this point is $120 million, into an ecosystem fund that'll be used primarily for two things. The first is to invest in projects that are building on Sei. So any Sei project that is able to get traction or that is just interesting to these investors will be able to get commitments from this ecosystem fund. And the second is for on-chain liquidity. Because if you're building an on-chain exchange, the biggest question often ends up being like, where do you get this liquidity from? So the ecosystem fund is incredibly helpful over there. To your second question around what projects are building on Sei, there's over 150 projects that are committed right now. I want to say over 70 or 80 of them have already announced on social media as well. So there's a Sei ecosystem page, which lets you see all of those. And in terms of the types of projects that are there, I would say that they fall under many different verticals. Sei is a general purpose chain, so every single type of product can get built on Sei. I mentioned before the gaming and the more political token use cases. Beyond that, there's essentially every single type of exchange you can think of and many other types of applications as well. Some of the ones to mention would be Sushi. So Sushi is one of the biggest Ethereum exchanges that exist right now. And they're launching a perpetuals protocol on Sei. And that's huge, right? Because there haven't really been many examples of projects from the Ethereum ecosystem doing anything outside of Ethereum. I would say DYDX is the most well-known one, and Sushi will be the first to go to market to launch something outside of the Ethereum ecosystem. So I would say that's one of the really interesting ones. Besides that, some of the other projects to mention would be Astroport, which is also launching a spot exchange, or which is launching a spot exchange. Then there's Nitro, which is building a SVM rollup on Sei. So there's a lot of teams from the Solana ecosystem that wanted to launch on Sei, but they were hesitant because they would need to rewrite their smart contracts and get them audited again. In this case, they could just go ahead and deploy directly onto Nitro, and that would make it much more seamless experience for them. That'd be one of the projects. And then, yeah, I mean, different types of projects across different verticals. There's people building prediction markets. There's the political tokens that I mentioned before. And yeah, happy to go into any other verticals if interesting.
Yeah, no, that's super interesting. So you brought up an interesting use case there in terms of bridging from other ecosystems onto Sei. Like, how does that all work? And bridges are always, kind of a touchy subject, but I would imagine that must be part of your growth strategy to make it interoperable with other chains or other VMs. So just curious on how you guys think about doing that.
Of course, yeah. So at a high level, Sei wants to have all the infrastructure ready to go from day one. So bridging from any other ecosystem will be supported from day one. With that being said, we think that like having bridges, there's often this misconception that if you have a bridge, liquidity will seamlessly come from that. And I think that's just completely wrong. I think as a layer one, you need to make sure all the infrastructure is set up. But besides that, like you need to make sure that there's actually interesting applications for people to want to come on, right? Like just building good infrastructure doesn't mean anyone's really going to come over and use it. You need to make sure that there's more interesting use cases for people to come on. So I would say that the bridging part of it, like that'll be ready from the get-go. But the more important part is just making sure that interesting founders are launching good projects on Sei. And some of these projects will be extremely successful, which will be what drive a lot of that usage of the bridge and I guess any other infrastructure that is built out.
Yeah, the whole build it and they will come thesis probably works more at the application level than it does on the bridge level. You have to have a reason to port assets over. And so your focus on creating those types of endpoints for real adoption will then allow for more stuff to flow through the bridges, for lack of a better terms.
I also have this kind of same feeling for wallets. Like I feel like there's so many new wallets that have been getting built in the bear market that are solving this problem. Like, okay, onboarding is difficult, so let's build good wallets to help people onboard. I think that is a genuine problem, but I have like a lot of friends that are very tech savvy that can definitely figure out the experience of going on to like MetaMask and using MetaMask to connect to Ethereum, but they don't. And the reason for that is because they are just like there's not strong enough of a use case for them to come on chain, right? So I think in general for infrastructure, like having that use case is what really drives people to want to come on. Just building the good infrastructure generally does not really end up ever being that meaningful.
Yeah, no, having a gateway to go nowhere, unless you have a reason to be in the ecosystem, you'll find the right path to get there. But yeah, it certainly is a massive, blocker for adoption. As the underlying infrastructure is being built, but the actual use cases on top of it need to continue to mature and flourish. And hopefully in this bear market, a lot of people in your ecosystem and others are continuing to build that so that, there is that demand side of the equation to be using certain tools that make everyday lives better rather than just having the underlying infrastructure there. So what's your road to Mainnet? What's that look like over the next couple of months for you guys?
Mm-hmm. Yeah, so there's currently a public testnet that is running. So for anyone that wants to play around with Sei, there's an incentivized testnet program going on as well. So anyone that helps stress test Sei will be eligible to get incentivized testnet rewards. So we definitely encourage all listeners to get involved with that. Besides that, Mainnet is coming soon. More updates around that will come from the Sei Foundation in the future. And yeah, I mean, I think it's definitely been pretty crazy just to see the entire community rally around us, especially like in the past 6 months. I think that there's just been a massive amount of growth happening. It's pretty surreal to see all these different projects that are launching as well. So yeah, in terms of anyone that wants to get more engaged with Sei, there is that entrepreneur in residence program. So that is the way for good founders to start building. And I mean, every single step of the process, Sei can be helpful for you to raise money, to launch. So that'd be, I think, one pretty easy way. And then there's the ecosystem fund that'll be there to help out just any founder, any team that is launching on Sei as well.
Well, it's exciting to see you at the front end of that exponential growth curve, because it's I'm sure been a lot of work to get yourself to this this standpoint, but sounds like a lot is accelerating within the Sei ecosystem. So yeah. Appreciate you sharing more about what you're building. Any other takeaways or closing thoughts before we let you go?
Yeah, I mean, I would say that, yeah, we've definitely been working super hard to get all of this ready. The team has literally been working 24/7. And yeah, it's going to be pretty exciting to see it all coming together in Mainnet. So, I mean, for anyone that wants to learn more, you can follow Sei on Twitter. So it's SEINETWORK. So you can follow Sei's Twitter handle, a lot more information over there. And if you want to get in touch with me, you have any questions, you can just shoot me a DM on Twitter. JAYENDRA JOG is my handle. So yeah, those are closing thoughts from my side.
Perfect. We will tag both of those as we send this out to our audience, and very much encourage folks to follow along with what's being developed on the Sei ecosystem. Very exciting times. Thanks for tuning in and joining us today, Jay. For anybody out there that's following us along, tell your friends about the show. Stay tuned for our next episode. We'll be back with another episode of Compound Thesis in a few weeks. Take care, Jay.
Awesome. Thank you, sir.